Ever wondered what collateralized mortgage obligations are? Well, let's lift the veil on this intriguing financial instrument. Picture a pool of home mortgages. Now, imagine this pool being divided into different slices or tranches based on the maturity of those mortgages. These slices are what we call collateralized mortgage obligations, or CMOs for short. Each tranche of a CMO has its unique risk and reward profile, decided by the maturity of the mortgages in that tranche. So, investors can choose the tranche that best aligns with their risk and reward preferences. Think of it as a buffet of mortgages. You pick and choose the ones that suit your taste and leave the rest. This is the essence of CMOs, a type of mortgage-backed security that separates mortgage pools into different maturity classes. It's a fascinating world, isn't it? Now that we have a basic understanding of what collateralized mortgage obligations are, let's delve deeper into how they work. Diving into the world of CMOs, we first need to understand the concept of tranches. Think of tranches as layers in a cake. Each layer represents a different level of priority for receiving mortgage payments from the pool of mortgages that make up a CMO. The payments from homeowners are funneled to investors, starting with the top layer, or the short-term tranche. Why short-term first? Well, these are investors who prefer a quicker return on their investment and are therefore willing to accept a lower rate of interest. Once the short-term tranche is paid off, we move on to the medium-term tranche. The medium-term tranche caters to investors who are okay with waiting a bit longer for their returns. They get a higher interest rate compared to the short-term tranche as a reward for their patience. Once the medium-term tranche is paid off, we then get to the bottom layer of the cake, the long-term tranche. These are the investors who are willing to wait the longest for their returns, and thus, they are rewarded with the highest interest rates. It's important to note that the longer the term of the tranche, the higher the risk, due to factors like changes in interest rates and the risk of homeowners defaulting on their mortgages. Understanding tranches is crucial to grasping the risks and rewards of CMOs, which we will discuss next. Like any investment, CMOs come with their own set of risks and rewards. Diving headfirst into the risks, one of the most prevalent is prepayment risk. This arises when homeowners pay off their mortgages earlier than expected. When this happens, investors may receive their principal back sooner than anticipated, potentially at a time when interest rates are low, thus reducing the overall yield of the investment. On the flip side, there's also extension risk. Now, this is the exact opposite of prepayment risk. If homeowners delay their mortgage payments, investors may find their principal tied up for longer than expected, making their money less accessible for other potential investments. But don't let these risks deter you. The rewards can be equally enticing. One of the major draws to CMOs lies in their potential to offer higher interest payments than other types of bonds. This is because CMOs are typically backed by a pool of mortgages, and the interest rates on these mortgages are often higher than what you'd find on a traditional corporate bond. Moreover, CMOs offer a degree of flexibility in terms of the investment time frame. With various tranches or segments, investors can choose a tranche that matches their investment horizon, be it short, medium, or long-term. This flexibility can be a significant advantage for savvy investors. With both risks and rewards at hand, it's crucial to know who might be interested in investing in CMOs. So, who exactly are the ideal candidates for investing in CMOs? Well, let's delve into that. Institutional investors often gravitate towards CMOs for their potential to deliver a steady stream of income. Think of banks, hedge funds, and insurance companies that have the financial muscle and the risk tolerance to invest in these complex securities. Next up, we have retirement funds. These entities often have a longer-term investment horizon and are looking for stable, income-generating assets. CMOs, with their mortgage-backed nature, can provide that income over extended periods. Lastly, let's not forget individual investors. Those who are well-versed in the intricacies of CMOs and understand the associated risks can also consider investing in them. However, it's crucial for individual investors to have a long-term investment strategy and not be swayed by short-term market fluctuations. Remember, understanding collateralized mortgage obligations is a stepping stone towards acing your Series 7 exam and becoming a savvy investor.